Good afternoon, everyone. My name is Thomas Sali, and I am a first-year full-time MBA student and director of today's first panel discussion, Latin America, Banking on Innovation and Technology for Financial Transformation. Over the last few years, Latin America financial landscape has been on the brink of significant transformation, with technology firms deploying even more innovative platforms, venture capital flowing to fintech startups, and government placing increasing importance on financial inclusion. The stage is set for disruptive business model to transform Latin America traditional banking sector into something beyond our imagination. Our speaker will share their ideas on how to respond to this call from action from various perspectives, including traditional banking, venture capital, and technology. The distinguished speakers on these panels are Mrs. Cate Ambrose. She is the President and Executive Director of the Latin American Private Equity and Venture Capital Association. Mr. Walter Bailey. He is the current Chief Executive Officer of Banco del Crédito del Perú, known as BCP, the largest bank in Peru, and Chief Operating Officer of Credicorp. In April, Mr. Bailey will lead Grupo Credicorp as the new CEO. Mr. Eduardo Urdapilleta, a UCLA Anderson alumnus who is the Executive Vice President, Chief Deposit Officer, and Chief Marketing Officer of BofI Federal Bank. The panel will be moderated by Professor Bhagwan Chowdhry, Professor of Finance at UCLA Anderson. His recent teaching, research, and applied interests are in the areas of microfinance, financial technology, and impact investing. Over the last several years, he has supervised several MBA student projects in microfinance and fintech. He also teaches a course on blockchain. Please join me in welcoming Professor Chowdhry and our distinguished speakers. Thank you.
Thank you. It's a great pleasure to be here among such a distinguished set of panelists. So what I'm going to do is I'm going to ask each of my panelists a series of questions so that we can first learn about who they are, what they have done, and then we will jump into a conversation about the topic today. So let me start with Cate. Cate started as a journalist, and she writes a lot. I hear you write a lot. You write for CNN, Bloomberg, Fox Business. You also teach a class at Wharton. Tell our students how important it is to write.
I do not teach a class at Wharton. I am a guest lecturer at Wharton on emerging markets, private equity, and Steve Sammett's emerging markets, private
That's
equity.
okay.
Class.
We call that
okay.
teaching.
Good, we'll let it pass. Actually, it's interesting you should say that. This is completely spontaneous, but I do believe writing is an incredibly important skill, and I'm always surprised to see how much that skill has gone away. I think partly the advent of technology. And actually, one of the things that we do at LAVCA is publish newsletters. And a lot of that is data-driven. We have many thousands of subscribers to the two newsletters that we publish on private equity and real estate and then venture capital and tech in Latin America. And having the ability to produce that content and to edit it, I mean, we live in a world obviously now of fake news, incredibly important to produce and write well and write clearly. In fact, this morning, we're just finalizing our number in our annual industry data for 2017, and I get the report from our research director, and I still personally edit it myself. So I think communicating clearly in writing continues to be a very important skill at every level, as a manager of a business or an organization, of somebody who's producing or consuming news, and I really see that falling away in young people today.
So I'm really happy to hear that, because I always tell my students, writing isn't just writing. Writing is a way of thinking. Every time you think you understand something, try and write it down, and you'll realize you don't understand it well enough. And when you actually write it down, it changes everything. I've used that a lot in my teaching. When the students want their exams regraded, I don't talk to them. I say, please write it down. Most of them go away. They don't want to write, because to be able to think through your ideas is very, very important. So, Cate, then tell us about your journey to LAVCA. LAVCA, of course, is the Private Equity Venture Capital Association. What does it do? How did you fall into LAVCA?
You know, it was completely opportunistic, and I think it's a little bit of a lesson for looking at careers today. It's so difficult to know today, as you're going out into the professional world, what careers are going to be relevant 5 or 10 or 15 or 20 years from now. A law degree today is not what a law degree was 20 or 30 years ago. I was in Spain for many years. When I moved back to the United States, I wound up working for The Economist magazine, but putting together actually conferences on finance and investment with some incredible people. It was a great opportunity, and some heads of state and roundtables. But somebody said to me, you should do a conference on private equity in Latin America in about the year 2000. Actually, someone that Walter knows well, who hired me at LAVCA, Eduardo. And so I got this niche of experience. I got to know that community very, very well and organized that conference for many years. And then I wound up being at the UN. And Eduardo called me in the year 2007 and said, we're looking for somebody to run this association. Would you be interested?
And he offered you lots of money, right?
No, just the opposite. I had to take a 50% pay cut to take that job.
Right.
And I was leaving an incredibly prestigious group of people who I was working with at the UN, but I could see that wasn't going to be a good long-term opportunity for me. And what I loved was the opportunity to do something entrepreneurial. And you could also see in 2007 that emerging markets private equity was really taking off, and it would be a great platform. So 10 years later, we're now 10 full-time staff, 190 member firms, somebody in San Francisco, somebody in Brazil, office in New York. So it's been a great, fun, very fun trajectory.
So 10 times increase, and your salary has increased about 10 times?
I try to keep it
all right,
on par.
okay,
We're a nonprofit. We're a
okay,
nonprofit.
all right, okay, okay. So let me move next to Eduardo. Eduardo, of course, you are famous because you went to Anderson School. Is that right?
Of course.
Okay. Please give him a big round of applause.
Talking about careers, can you hear this? Talking about careers, yes, you're right. Everything for me began at UCLA Anderson. This was the 90s, actually it was in the other building. I was the last class that was in the older building. And I was coming from Latin America. This is before the internet. At that time you applied with paper and everything, right? And I didn't know very much about the business landscape and much less about the US. And I was here, studying here, then McKinsey came to my life. I interviewed with them, I did well, and then my career began because of UCLA Anderson. That's totally true.
So you were at McKinsey,
everything
and
began
then
at Anderson.
And then you went to Citibank?
Well, it was a long journey because, yes, I went to McKinsey, I worked for them. I was the partner for financial services in Latin America for a few years. Mm-hmm. Then I left McKinsey, worked for the World Bank because I wanted to do something good, and it was the time of the crisis. And then I was for Citibank, and now at BofI, which is a pure digital bank, and that I thought it's a great opportunity, and digital banking, I think, has a lot to do with banking in the future.
Excellent. So we'll come back to digital because that's our topic today.
Thank you.
But let me go to Walter, who has traveled the farthest of the three of you, all the way from Peru, and you have had many roles, and now you are going to be a group chairman. Peru, of course, has been a model of banking into the poorest of the poor sector, microfinance. I started learning about microfinance almost 15, 20 years ago, and Peru was the model. And I was teaching a class in microfinance, which was very popular. But over the years, people stopped getting interested in microfinance. So I renamed the class. I call it FinTech now, and now it's full again. But tell us your journey in what you have been doing over the last several years.
It's been a long journey.
Yeah.
After school, I worked with Citibank for about 13 years between Peru, Mexico, Venezuela, and Lima. Then I was a partner in an investment bank in Mexico for 2-3 years. And then I decided to go back to Peru. And I joined what was Banco de Creditor, and I've been there for 25 years approximately, the last role as CEO. And we are part of a larger company called Credicorp, which also has, apart from commercial banking, investment banking, insurance, pension fund, and microfinance. And that's been a fascinating learning for me about microfinance. We have the largest microfinance institution in America, I believe. It's called Banco, which has about 1 million customers. And there are tremendous challenges going forward related to microfinance. And we can go into that a little bit, or now or later, wherever you want to tackle it, because I believe that the existing model is finished. I think we have to...
It's finished?
Yes.
Okay.
Microfinance has taken the model to a certain level of penetration in the bottom of the pyramid, if you will. But there's still a lot of people underneath, and microfinance is not getting there. And I think we have to reinvent, we have to work with technology, we have to lower costs. I think there's tremendous challenges in the microfinance industry in the next 5 to 7 years.
So why don't we start with that? Let's talk about this transformation. So I'm going to go in the reverse order now. Tell us a little bit more about that.
Well, yeah, sure. Transformation at our organization is a journey, and I'm going to take about a couple of minutes to explain. Because we are not part of a very large multinational organization, some of us, senior management, make a concerted effort to know what's going on, what are banks in the world doing, to make sure we have best practices. And I remember about 4 years ago, I was in this conference, bankers conference in Munich, and there was this professor from MIT that said, the digital strategy has to start from the board.
From the board?
Yes. I said, I'm in trouble. My board members have difficulty with their iPads. I mean, they are not the most technologically advanced set of board members. So I pull up my phone and I send an email to the head of retail and said, Gianfranco, I'm going to be back next week. Could you make a presentation to me about our digital strategy? And Gianfranco he responds very quickly. And I was surprised that he took 2-3 days to answer. And says, the mail comes back and says, yes, I have arranged with your office and we're meeting on Wednesday when you're back. And I started looking at the mail, and he had bounced it to somebody who had bounced it to somebody, and it started to come back. So I said, red flag. Not only the digital strategy transformation is not at the board, it's not in the CEO, it's not in the head of retail, it's somewhere there. So that's what I said, we have to do something differently. This was about 4 years ago. So when I have a problem, I always solve it the same way. I delegate it to somebody and give her or her money to go and figure it out. So that's the way to solve problems. So I specifically, I chose a very important executive, Francesca, and I said, Francesca, you figure this out. In 6 months, I want you to come back with some kind of a digital strategy. So the first thing she did, she took us all a week to Silicon Valley, which is something that everybody should do at some point in time. And we started realizing that there are different ways of doing things. Agile and design thinking and blockchain and artificial intelligence and the cloud, customer experience. We started to say, hey, there's something out there that we are not incorporating in our plan. So we started this long journey of transforming the bank, and it started with very simple digital initiatives, which we prioritize, etc. And we started creating an innovation lab within the bank. Fast forward 2 years, that innovation lab had grown, and it had started to impact the organization in several places, and there was a certain level of pushback. Because, to give you silly examples, but we are very disciplined. When we hire somebody, we utilize the HEY methodology, determines you value the job, and that determines what is the range of salaries you have to pay, something very, very disciplined. But the Scrum Master does not fit the HEY methodology. So it initially said, just hire the guy and we'll figure it out later. But suddenly you start growing, and you cannot run 2 organizations. So we created the job of the transformation officer. And we put under that data, IT architecture, customer experience, and the digital initiatives, the Innovation Lab. And we started moving forward.
And who's heading that now?
The guy that is going to be replacing me 3 weeks from now, Gianfranco. Fast forward till July last year, I took again all the management team. This time we went to Berlin to visit fintechs and startups, and we went to Amsterdam to visit ING, who is probably one of the banks that has advanced the most in the way they're organized in the transformation. And we had some very intense days of meetings, and we came with 3 conclusions. Number one is that our very comprehensive transformation program that has 9 tracks with project management, PMOs for everything is fine, check, we're in good track, nothing is missing, we're fine, but faster, more ambitious. That was the first conclusion. The second, we're very proud that we have brought down our cost-to-income ratio, which is a key measure in banking, from the 50s to the 40s. He said, not enough. Somebody has to figure out how to bring this to the 30s. And the third, which was an interesting conclusion, is that a strategy that some of my colleagues, particularly in Asia, had done is that not only were they transforming their banks, but they were going out and being disruptors, be them in their own markets or in other markets. And I had been reluctant to utilize that strategy because I felt I could distract the scarce talent related to transformation, which has to work on the transforming the mothership, which is Banco de Creditor. I don't want them to go and do disruptions in Ecuador. I mean, we have a big problem here. But we found in this trip that there are other ways in which you can do things. And I remember this meeting with this startup in Berlin. There was this Colombian, Peruvian lady that was making a presentation, and we said, hey, we should do that in Lima. And she said, yeah, I'll go and do it. You can buy my company, we will be partners, we can figure it out. So there are other ways you can get things done than the traditional one, which is put a couple of managers there, give them some money, and wait 2 years for results. So we are now starting 3 projects, and one of them is the bottom of the pyramid, from totally different angle, with design thinking and behavioral economic kind of approach to things as to how do we solve the customer's problems or needs, rather than how from the bank or from the insurance company or from the pension fund, what product do I offer to the person. So it's been a 4-year journey, and I think there's a way to go. Sorry,
Okay.
That was long.
No. This
long
was
answer to a short question.
No, it's fascinating, and that leads me to my next question to Eduardo.
Yes.
Eduardo, I heard a rumor that Jeff Bezos wants to take you over. He wants your job. Is that true?
Actually, it's an interesting concept because most people are, no, they are not.
Okay.
As far as I know. But it's
You wish.
Yeah, but it's an interesting concept because most people are talking about the fintechs and the big banks in all this digital transformation. By the way, BofI is Bank of Internet, which is a purely digital bank founded in 1999, but actually growing in the last few years. But probably one of the contenders of the future are going to be guys like Amazon, where they have data and they know what you do, what you had for lunch, and what you're going to do your whole day. So
that
may happen.
Does that worry you? Does that worry the industry?
No. Well, it may worry some others. Let me give you two numbers. Walter was mentioning cost to income, which is obviously the ratio of cost over income. The lower, the better. So 2 numbers: 32, 74. 32% is our cost to income. 74% is the cost to income of the average of the large 4 banks.
Mm-hmm.
You would expect in the US, right? You expect in banking, size matters. So the largest, you are the more efficient because you have more access to technology, you have access to human capital. Well, it's not, because since we are purely technology bank, we don't have branches, we don't have real estate, costs are lower. And in a way, what's happening in finance, and that's why I think the comparison with Amazon matters, is what happened in retail like 20 years ago. I think it didn't happen in finance, particularly in the US at that time, because first, banking is an industry of, you have to have trust in your bank because you're giving them the money, right? Particularly when you're depositing, right? And people didn't have trust in these new companies, new concepts, etc. But after the financial crisis of 2008, nobody trusts the big brands in banking and probably trusts more Amazon and Facebook, or us. Why not, right? And second, there obviously been a generational change that people are more accustomed to do things online, and also even the older generation are using iPads.
Yes.
You know? So there's been a change in behavior and a change in trust. So I think the time has come. In terms of Latin America, which I think it's the topic here, you know, in the US we have gone, I'm originally from Argentina, but been living here for a while, thanks to Anderson.
Yeah.
Has gone through several steps, but actually Latin America can leapfrog. I remember in the 1990s, I was living in Latin America at that time, and there was telecom revolution in Latin America. Most telecom companies were bought, and I came to the US with my cell phone from Argentina, and I see that here the cell phones are analog. My cell phone was obviously digital in 1990 in Argentina, and cell phones in the US were analog. Why? Not because Latin Americans were better, no, it's just because they leapfrogged and they just went digital. There were no cell phones, so they didn't go through all the steps, they just went digital. I think something similar could happen in terms of financial services, banking in particular, digital banking in Latin America.
So you think Latin America might take a lead here?
Yes.
Possibly.
In many aspects, yes.
Okay. Let me ask Cate, because you are actually doing a lot of, you're following the private equity investments in this field. What trends are you seeing there? Tell us.
So technology is an incredibly important opportunity in Latin America for private investors. It was interesting watching Sebastian's overview, and there are so many different ways that you can look at the challenges that the regions face. And for example, the currency effect in the last few years in countries like Brazil and Colombia has really affected people who invested in those markets internationally. But technology has never been a more attractive sector than it is today in Latin America, and we are seeing higher and higher percentages of total investment dollars going into the region focused on technology-related investments, either startups and fintech or more larger-scale technology businesses. Most of what I would talk about here would be related to startups and fintech and where venture capital is investing.
Yeah, give us a breakup. How much is it going to the smaller guys? How much is it going to the big guys?
Actually, we have
you have data on that.
I have data, and some of this isn't even public. We're literally just finalizing the numbers for 2017. But total venture capital investments in 2016 were 500 million, and they doubled to just over $1 billion in 2017, which is great. Of that, about 200 million went to fintech specifically, and there were 60 or 59 transactions specific to fintech. But even more broadly, because that's more startup type thing, 1.3 billion, the largest sector for investment of about 8 billion that was invested in everything, in private equity and venture capital in Latin America in 2017.
That was the total.
8 was the total. 1.3 of that was technology related. In dollar terms, and 218, about half of all of the investments, transactions were technology related. Technology is incredibly attractive today because it's counter-cyclical, because it isn't affected by a lot of the macroeconomic trends that we heard Sebastian talking about, or the political volatility, et cetera. The growth in those sectors is incredibly important. And actually, when you look at China, obviously dominates globally, and we see these behemoths and the size of the venture capital market in China, but it's largely closed to international investors. It's almost impossible because China has developed WeChat and a series of their own local incumbents, and international investors aren't active there. So actually, the largest market for Uber in the world, including beyond New York, is Sao Paulo. When you go to Sao Paulo today, you see Uber stations and Uber advertising everywhere. Facebook and Google, incredibly important markets for them. I think Brazil is the second largest market for them globally. And Amazon, we were talking about this with Christian, who's going to work for Amazon, is all over. They've moved into Mexico, they've gone into Brazil, and now they're moving into Chile and other markets. Now, when we look at fintech, it's just one of the easiest and best opportunities for technology to disrupt incumbents and large banks. And a couple of there's a particularly exciting example in Brazil with Nubank, They're a credit card provider. Actually, it just came out in the news yesterday that they received another $150 million on top of the like $200 million that they've already raised. And that $150 million came from a Russian, one of the Russian sort of oligarchs or putting money around the world. They are now officially a unicorn because in the valuation of that round, it puts them to over $1 billion valuation. And coming to the discussion here, I mean, basically, they've been around 5 years. Interest rates are very high in Brazil. And I think the biggest picture around this topic in a region like Latin America is that 50 to 60% of the population is unbanked. Traditional financial institutions and banks have all kinds of barriers to access the overwhelming majority of the population in these countries.
The majority of the population doesn't have credit cards and
doesn't even have a bank account. Many of them are
bank.
operating in cash. And some of the solutions that are coming up, there's another startup, Conecta, in Mexico, where somebody can buy something either online and then literally go to a retailer like a 7-Eleven on the corner. It's FEMSA Comercio. They have a partnership between this fintech startup and a retailer, that the person who's buying something online can then go to the 7-Eleven or the Conecta, on the FEMSA Comercio on the corner, pay cash, and have the product delivered to them. So fintech startups, just to Eduardo's point, they have much lower costs. When they're your highest cost, low cost, and then David Velas, who started Nubank, few $1 million and very, very low overhead is basically coders and this type of thing. And they've been able to scale very, very efficiently. So I think it's a really significant challenge to traditional financial institutions in Latin America, which by culture and practice tend not to go outside their traditional client base of people who they're very confident are going to be able to pay back. I mean, they're really lending to a very small group of businesses and individuals.
So, Walter and Eduardo, I want to ask both of you, there is this tension between, is it going to be the little proverbial small player that's going to disrupt and, break up these big guys? Or there's an alternative theory which says, no, the big guys will actually adapt and they will change. So let me start with you, Walter. First of all, can you use an iPad now?
Yes.
Okay.
Quite well, actually.
Okay, good.
But no, a couple of years ago, yes, we were all ourselves, we were very concerned that indeed, because the quality of the customer experience we were offering was not very good compared to what customers expect today, which is what an Amazon, a Spotify, a Uber will give you in terms of customer experience. We were in a very risky position. And of course, that's why we started 4 years ago ourselves, this transformation project, which is well underway. But the world has evolved, at least in Latin America. What we have found is that the fintechs have had a lot of difficulty scaling up and getting customers. And the trend that we see a lot more is of collaboration with the large banks. We are working with two fintechs ourselves. One is a Canadian and the other is a European. They don't have to be Latin American. So I think that us large incumbent Latin American banks, because of the relatively large market share positions that we have a tremendous opportunity to continue being relevant to our customers 5, 10, 20 years down the road if we aggressively pursue competitiveness in our cost and taking our costs down and improving the quality of the customer experience and transforming ourselves. So my biggest concern are not the fintechs today. It is the fact that you have these large companies that have customers and capital.
The Amazons and the Googles.
That
the
could
small
eventually-
guys, your old strategy works. If you can't beat them, just buy them.
But on the large ones, one of the advantages of being in a relatively small country is that we will see it coming. If somebody figures out, one of these large players, how to be really disruptive in any market, By the time they go to Latin America, they're focused in Brazil, Mexico, Argentina, and by the time they figure out Peru, we will see them coming. So we will adapt before. Yes. But if we think, take it a step further, this...
They're not traveling by ship, they're traveling on the wires.
Yes.
They come very fast.
But today, it has not happened so far in the world. The only country I would say there has been a truly disruptive move where banks have been seriously affected by non-banking institutions is probably China, where you have the Alibabas and the Tencents, which are a combination of Facebook, Amazon, and everything together. But if you go outside that specific, there are lots of, you had the Lending Club in the States that was growing, a new bank which is capturing about 20% of the new credit cards of the system, but their market share is still below 1 or 2%, but they're growing very fast. So it really hasn't happened yet. I mean, could happen in an hour, but it hasn't happened. So I think that we banks have a tremendous opportunity, and most of us are taking that opportunity to really transform ourselves and to continue being relevant, to our customers in the future.
Well,
Eduardo.
I guess you asked this question because you wanted to have a debate, but actually I agree with what Walter is saying.
No, we don't want debate. We just want the truth.
In the global scale, I see fintechs more collaborating with banks, and mine is a bank, it's a small bank, so there are two plays here. One is the play between large banks and small banks, and the other plays between banks and non-banks, right? Mm-hmm. I think fintechs more collaborating and with banks than being really an alternative. For example, I go to Finnovate, which is a big conference that happens, or Money 2020. That's another conference that happens in Vegas, so it's a nice place to go and go for a conference. But I remember one presentation about this app that would transfer money overseas everywhere instantaneously. Good luck with the Fed to getting authorization for that. So you need the creativity of the fintechs, but you have to know that banking is a heavily regulated business because of anti-money laundering concerns, because of fraud. There are a lot of other concerns that's why you need a banking license, right? So I think the creativity has to go also in par with banking, at least is my point of view. Now, regarding banks, large banks versus smaller banks, because fintechs could become banks then.
Yeah.
Or Amazon could become a bank, or could buy a banking license,
Yeah.
buy a small bank somewhere in North Carolina, and then you're a bank. I think the US and Latin America are a bit different. First of all, I mentioned before that in the US, something that was advantageous to us is that the brands of the banks have gone down very fast, they're going down very fast. You know all the cases of one of the big four that been opening accounts to clients that have never opened those accounts, never wanted. That's very bad publicity. Two of the two big fours have to be helped by the US Treasury in order to survive the 2008 financial crisis. Another one of the big fours is increasing fees because they cannot maintain the branches. Of course they cannot. So the reputational aspect is very important, while in Latin America, incumbent banks still have a very high reputation. So I think the battle is different there. And again, I think in Latin America even more this association is going to work. Second, one thing that we have not mentioned, but is not minor, is it was mentioned briefly, is the importance of the cash economy in Latin America versus the US. One thing that my bank is good at is because we just connect through an API, through a connector to a company, and we just transfer money here and there between the two of us. Or people just transfer money, like all of you know Venmo and these type of things, right? Because people here pay taxes, right? So
that's right.
The formality is low, right? In many Latin American countries, there's a big part of the cash economy, that is cash-based, in part because of cultural reasons, but in part because in formality you don't have to pay taxes on that, right? So that aspect is much more difficult. I find very interesting the solution you find to have paying in cash through a store, because you have to find alternatives to just a purely digital economy in Latin America. It has to be a mixed model, because cash is going to stay, informality is not going to disappear besides whatever government is in power in the next 5 years or so.
So that, sorry, you're going to say something.
Well, I think what's coming out here is the distinction between the types of products and services that traditional banking has been offering and the types of products and services that are being innovated and created in order to reach the unbanked and have things like access to cash or allow people to pay for things when they don't have bank accounts or any kind of a credit history. And I think, though, the question will be what kinds of products and services will it ultimately be interesting for a Banco de Crédito Peru or an Itaú or a Banamex to be offering in their markets, and what kinds of products and services is it just going to be more efficient and is a fintech just going to be better at? The process, going through the credit histories and having some sort of a tool for credit. I know the banks in Mexico, I've heard, are not collaborating and are not sharing information even among each other on that, let alone with fintechs who are trying to challenge them. And it's one of the challenges for new banks. So there's a higher credit risk for, say, a new bank going out and giving credit cards. They don't have capture the same kind of credit information than a very established bank does. But I think it's going to be really interesting to see, again, the different products and services, how these pieces play out, and the relationship between the different types of financial services. For the venture-backed startups in Latin America, I know the financial investors, we were thinking about this on the flight over, and I was thinking, for venture capitalists and private equity investors, they want an exit. They put money in, and at a certain point in time, they want to sell that company to somebody else, or they want to see it IPO'd. So maybe for the financial investor, the interesting thing is to sell that financial startup to Banco de Crédito Peru or something else. But I know some of the entrepreneurs, like David Velez of Nubank, and believe me, they're not thinking about going to work for some bank or selling their startup to a bank. They want to have a great big IPO, they want to be independent, and they want to challenge the banks.
So it seems to me that we should consider a third possibility, not the smaller or the big. Maybe the third player is completely different. Maybe the third player is your blockchain or Bitcoin. What do you think?
Okay, blockchain, Bitcoin. Blockchain is a wonderful technology. Most of us banks in the world are learning how to apply it. I always think of blockchain of a solution trying to find a problem. It's a wonderful technology, and people are trying it with many different things, but it really hasn't gotten yet a wide use in any financial institution.
Yet.
And it's been yet, and people are using it for ID, for identification, for fraud management, smart contracts. I mean, there are a whole series of initiatives that...
And anonymous cash transactions.
For cryptocurrencies. But leaving the cryptocurrencies on the side, the blockchain technology is being utilized by banks all over the world. There's a very interesting consortium called R3, I think is the name, where I think we're 50 banks in the world that we are partners of that consortium, and we share information about what each of us is doing with Bitcoin, with blockchain. So everybody's trying, but nobody has found a true wide use yet, but it will happen. Cryptocurrencies, I don't have a lot of faith in them. I don't understand how people can eventually trust them. There's this protocol where somebody decides that you are going to create more currencies, and I have no idea who that person is, how that. I think there's a lot of hype around it. I think if it gets too big, it probably will get regulated. So I don't pay a lot of attention to cryptocurrencies. I pay a lot more attention to blockchain.
Okay. Eduardo, do you have any views?
Yes, I think they're two very different things, although they are typically connected because Bitcoin uses blockchain and vice versa. Blockchain, as far as it's distributed servers with information, is something that is possible, and it's something that is probably going to come. Now, Bitcoin, which has been something that has been in the news so much in the last few months, and I remember 2 years ago, I mentioned Money 2020, 80% of the conference was about Bitcoin. I said, wow. And that was before it went up by 100%.
Yeah.
Now, there are a few issues with Bitcoin. One is, right now, if my numbers are correct, 70% of transactions of Bitcoin are in the black economy. Are guns, are drugs, and things, because you don't need to identify the other party. Right?
Some of the biggest innovations happen in the black economy.
Yeah.
And then the regular people come in.
Yeah, but the issue is, again, going part of my comment before, is when is the regulator going to come in, right? Because you don't identify the other party, which is good, but the fact that you don't identify the other party could also become a risk for countries. So someday, I'm sure the regulator is going to come in. And I don't know what's going to happen then, because the difference between a Bitcoin transaction and an ACH, a transfer between banks, is you know who you're dealing with. Here, you don't.
You have the KYC
and then the other thing is, just as a comment, I think the other panel is in energy. It consumes more energy than an average country in Central America.
But that's only Bitcoin. But there are others which don't require this, so the whole field is going to evolve with some alternatives. If not
Maybe.
Bitcoin, what are you hearing about blockchain and Bitcoin?
Well, of course, the conventional wisdom that blockchain is important and we all need to understand it, but that Bitcoin with ICOs and the rest of it is obviously speculative at this stage. We had this question on the list, and the person who heads this area at LAVCA gave me the notes of the few transactions, some digital wallets that have been launched, and there's been a few early rounds of investment in a few startups that use Bitcoin as the basis for a few of the startups. But the other piece of information that I've seen is the significant community of high net wealth individuals and families in Latin America are actually very active investors in Bitcoin. And it's been a really bumpy ride. I think there's been this mentality among some of the wealthiest people in the world is, oh, you want to get in and it's an opportunity, but the volatility around it has got to ultimately scare some people off as well. It's just clearly, and then we had the Venezuela,
That's
ICO.
right.
I mean, with that as a reference point for Latin America,
This turned out to be a disaster.
Yeah,
right?
I mean, what else would you expect? I mean, it was basically just making up, money.
This question is for Cate. Where do you see LAVCA making the bigger percentages of investments in Latin America, and why? And what are the parameters that are guiding those investments?
So just to clarify, we are a nonprofit organization representing 190 member firms today. So we have everybody from KKR and Blackstone and Warburg Pincus all the way down to venture firms investing in the region. So we do have a good window. Right now, sector-wise, infrastructure, energy, and renewable energy in particular, very, very strong. Technology, as I mentioned, both in startups, small transactions, and some later stage transactions for things like data centers. Real estate is booming right now, and that's a sector that's a little bit outside, but something that we're starting to follow more closely. Agribusiness, a sector where Latin America has a lot of natural advantages. We hadn't seen as much historically, and there had been a lot of interest. I see more happening in agribusiness right now. And then education and healthcare, all of these consumer sectors, retail, education, healthcare, focused on consumer, but where there's still very strong demand from the middle class. So those are some of the sectors that are really dynamic now.
Thanks.
Thank you for being here. My name is Roberto. I'm from Mexico. I'm also from USC Marshall School of Business.
That's the other school in LA.
Fight on. My question is more probably to Walter Bailey. I'm Mexican, and in my opinion, there is some institutions in Latin America that are doing fintech. There are a couple of them that are doing that, like your institution. But I see a very big gap between the US and China, Japan, comparing this with Latin America. One solution is the one that you mentioned, that is importing this technology. But I think that's the traditional way that we had been doing in Latin America, importing these technologies. What do you think we need to do in Latin America to transform LATAM as a hub of fintech or creativity innovation? What are your recommendations? Thank you.
I don't think that's an easy task. It should definitely be top of the list. But some of the things Sebastian mentioned, what were the Goldman Sachs fronts that each of our countries need to evolve, clearly education is one of them. Unless we have good university, I mean, let me give you practical examples. I'm not a great theory person, I'm a practitioner. We have tremendous difficulty finding data architects and data engineers. And there's simply none available in Latin America, very few. Some in Argentina, very few. So we go and we solve the problem, because I'm a practical person, by bringing people from Spain, from wherever we can find them. But until we have the right university, I don't think we're going to have the talent, and the talent is the one that creates the innovation, etc., I think. Now, having said that, I am surprised at the amount of talent available if you know where to look. That is not the place where us banks traditionally looked for talent, but there is a lot more, even in Lima, than I had initially thought there would be. You have talent that you need to train. But so I don't have the answer, but those are my thoughts.
My name is Victor Florian, and I have a question specifically to Mr. Bailey. But I want to go around the question first, out of a concern. I heard rumors that China is investing more money in Latin America regions. So, in reading some statistics, I found that the U.S. had more billions of dollars in Latin American region for direct investment than China. So that is a little less worry. But nevertheless, I want to ask the guys that are coming from the trenches, which in this case is Mr. Bailey in Peru, to tell me, for example, who is investing in Peru?
China investment in Peru has been mostly focused on natural resources. The large investments have been on their appetite to access sources of natural resources, particularly mining. Largest investors in Peru, apart from China, it's really very open, depends on the sector. Australian companies in mining, US companies, Brazilian companies. So I would not mention one specific source of capital, and the Chinese are very focused on natural resources.
Go ahead.
Hello, my name is Eduardo Perez. I am an undergraduate student here at UCLA, and my question is, it's directed to everybody, and I was hoping if you guys could please elaborate more so on the future of banking in Latin America. If you see more traditional banks acquiring these new up-and-coming fintech banks, or if you see them more competing with the fintech banks.
So I think we did address this a lot, but maybe you want to take a quick shot at it.
Cool.
Yes, well, my point of view there is actually everything's going to happen. It's not one model that's going to be unique, right? But probably the most successful model is going to be more of collaboration than competition. I think it's a totally different market. And it also depends on the Latin American country. We are talking Latin America as a unity, it's not. But it's totally different market than the US, which is much more competition.
I have a lot of contact with most of my peers in Latin America, and I know at least 3 or 4 that are doing spectacular jobs in transforming themselves. And one way to transform yourself is to acquire talent via buying fintechs, associating, working together, collaborating. But I do see this huge trend of the large incumbents in Latin America doing a superb effort in transforming themselves.
And I just mentioned as an additional idea that there are other players like non-bank financial institutions, retailers, and others that provide credit that are definitely going to be in the mix and are going to be partnering with those fintechs, not only traditional banks.
Yes.
And we haven't thought about it enough. It took US industry a long time to figure out that, for example, people go to buy grocery stores, maybe that's where they can do their banking too. So I think this mixing of retail and banking and other things, we are more likely to see that happen.
There are very good examples of that, particularly the Chilean Falabella and Ripley, large department stores, supermarkets, whatever. They are very good at originating new customers
Right.
and bringing them to the banking system by providing small quantities of loan, which are initially just spent in their own stores, but they bring into the system. No, they've been very successful, you're right.
Yeah, even healthcare, for example. Now
Yes.
you can go to Ralph's and get a flu shot there. And so the idea is, rather than getting customers to come to you, you can go where customers are going already.
My name is Yandro Valdez. I'm an executive MBA student here at Anderson. And my question is for Eduardo, and it's regarding the competing strategies that BofI Federal has that's more of a commercial-centric bank compared to the strategy of JP Morgan and Bank of America, who recently stated they're going to expand their branch network. So wanted to just get your thoughts around that.
Yes. Well, our strategy is, first, we want to be very efficient. I mentioned these two numbers. Part of that efficiency can be translated into lower fees and higher rates in terms of deposits, or lower rates in terms of loans to the customers. So there is a efficiency/pricing strategy, which is not different what happened in retailing when Amazon began with books 20 years ago, buying them. But also it's a strategy of customer experience. We do think, and this is debatable, that most people don't want to go to branches anymore. So if you go to a bank branch here in the US, they are a desert. And it's actually something cumbersome that you don't want to do, etc. It's much better if you do everything online, or at most via call center, right? If you want to hear a voice. But even that, people don't want to hear a voice, they do it online. So the second important part of the strategy is having a much better CX, customer experience, than these large banks. How can we do that? It's not necessarily because we are better, it's because we are newer, so we don't have legacy.
Let me complement what Eduardo was saying. Even in an economy as Peru, which is not very sophisticated and with a lot of unbanked population, and with a lot of cash transactions, only 3%, I think it's 3 or 4% of all transactions are done at the branch. So
Right.
the branch has stopped being a place where people go to do transactions. It's a place where people go to buy products, to get advisory. So we're actually shrinking our branch
Right.
network. Our
Right.
branch network of about 800 branches is slowly starting to come down. And that will be one of the ways in which our cost to income will go from the 40s to the 30s, just by having less people, less real estate, less infrastructure. So, 3% of transactions being done at the branch is very small,
Very small.
for a country with the level of sophistication
Cash
that Peru has.
intensive.
Yeah. So that is the driver, no?
Again, the question goes to Mr. Bailey, and I'm picking on you, Mr. Bailey. It's just that I'm concerned. Banco de Crédito in Peru is one of the leaders in the banking industry.
The only leader.
Right. Right. So now the question is, how is the bank doing in social responsibility?
We take this very, very seriously. And there's one very, if you want...
Why do you take it so seriously?
Because the only way, Banco de Crédito cannot be successful if Peru is not successful. The role that we play in the economy is so large. We have about 40% of the banking system, 30% of the insurance, 30% of the pension funds. So we are a very relevant institution, and we are more than the largest financial institution. We play a role in cultural life, in politics, in determining macroeconomic policy with government, and we participate actively in programs that help us get closer to the communities in which we work. We have this very strong...
So you think actually it helps your bottom line?
Yes.
Or do you think you're doing it because...
It's a positive cycle.
Okay.
It helps our customers, it helps our reputation, it helps the country, and it helps us. And we have several initiatives. One, the most important one is related to education, where we actually build schools and we make sure that they operate. And we have a lot of scholarships for students. We have huge projects related to...
So let me quickly ask
Yeah.
you, since you're running out of time.
Sure.
as you're doing more and more corporate social responsibility, have you cut your advertising budget? or not?
Absolutely.
You have.
Advertising
So this is in lieu of advertising. in a way.
Advertising is coming down because it's all digital now, and you know,
Okay.
you don't do ads.
So we are pretty much out of time. I'm going to ask one last question and ask each one of you to give me like a less than 30-second answer, which is, in 1999, the stock market was high because of this hype about technology, and we crashed. And NASDAQ is just about recovered 20 years later. Do you think we are at a similar hype, or do you think this time is different? You go first.
This time is different because the liability in this case, if there, I think valuations are very high. I do think there's a lot of, like on the venture side, huge overvaluation, but the investments in those startups are with companies like Google and Amazon. It's an Amazon buying a startup for $1 billion. Who's to say it's worth $1 billion or not? So back in '99, that was ordinary retail stockholders that were affected by that crash. So much of the exposure to the bubbliness around technology right now sits with big tech companies that are throwing money around because they have so much cash they don't know what to do with, big venture capital firms they don't know what to do with. And then it's just different. Technology is different today than 20 years ago, right?
Eduardo.
I do think this time is very different.
This time is
Of course, you may say I'm biased because I'm leader of a digital bank, but first of all, I think in '99, it was basically about very specific ideas in the internet. Now, the big difference is that now technology is pervading all the economy, all the aspects of the economy. It's not just about a retailer in the internet or something very small. So there's no way back because it has pervaded the whole economy.
Okay, Walter.
I agree with both of them. This time is different, but the reason is this. This didn't exist in the 90s.
Okay, on that note, please give everybody a big round of applause.